Every trader wants discipline. They promise themselves, tomorrow I'll follow my trading plan. Tomorrow arrives, the market opens, and within minutes, everything changes. The stop-loss moves, the rules disappear, the revenge trade begins. And at the end of the day, they ask themselves the same painful question: why can't I stay disciplined? Maybe you've asked yourself that question too. Maybe you've blamed your emotions, your lack of patience, your lack of willpower. Or maybe you've started believing that discipline is simply something other traders have, but you don't. What if none of that is true? What if the reason you keep breaking your trading rules has nothing to do with your personality? What if your brain is simply doing exactly what it was trained to do? Because here's something almost nobody tells traders. Every time you break your rules, you're not just making one bad decision, you're teaching your brain to make the same mistake again. And every time you follow your trading plan, even when it's uncomfortable, you're doing something much bigger than placing a good trade. You're literally rewiring your brain. The trader you become tomorrow is being built by the decisions you make today. And once you truly understand that, you'll stop chasing discipline and start building it. Because discipline isn't something you're born with, it's something you train. But before we understand how discipline is built, we need to destroy one of the biggest myths in trading, a myth that keeps millions of traders stuck in the same cycle. They believe discipline comes from willpower. But neuroscience tells a completely different story.
Most people believe discipline is a personality trait, something you're either born with or you're not. That's why when traders break their rules, they immediately blame themselves. I'm too emotional. I don't have enough self-control. I need more motivation. But here's the problem. None of those explanations are actually true. Imagine two people. One wakes up every morning at exactly 6 a.m., exercises, eats healthy, reads for 30 minutes, and follows the same routine every single day. The other person hits the snooze button, skips the workout, eats whatever feels good, and promises, I'll start tomorrow. Most people would look at the first person and say, wow, they have incredible willpower. But psychologists see something completely different. They don't see a person making hundreds of difficult decisions. They see a person who built powerful habits. Because habits require far less mental effort than constant self-control. That's why the disciplined trader isn't constantly fighting temptation. They've simply trained their brain to follow a routine. And the undisciplined trader has unknowingly trained their brain to ignore one. Here's something fascinating. Every time you follow your trading plan, even when you don't feel like it, your brain records that behavior. And every time you ignore your rules, your brain records that too. It doesn't judge. It doesn't care whether the habit is good or bad. It simply asks one question: should I make this easier next time? And whatever you repeat becomes easier. That's why discipline isn't built on your best day. It's built on your hardest one. Because every difficult decision is actually a vote for the kind of trader you're becoming. But this raises another question. If every repeated action creates a stronger habit, then why do bad trading habits form so quickly while good ones take so much longer? The answer lies inside one of the most powerful systems your brain has ever created, a system that quietly controls almost every decision you make.
More than 20 years ago, neuroscientists discovered something remarkable. The human brain loves automation. Not because it's lazy, but because it's efficient. Think about driving a car. The first time you sat behind the wheel, everything felt difficult. The mirrors, the steering, the pedals, the traffic. Your brain had to think about every single movement. But today, you can drive for 30 minutes and barely remember the journey. Why? Because your brain turned a difficult task into a habit. Trading works exactly the same way. The first time you moved your stop loss, you probably hesitated. You knew it was against your rules, but you did it anyway. Nothing terrible happened immediately, so your brain saved that behavior. The next time, moving the stop loss felt a little easier, then easier again. And before long, breaking your rules stopped feeling like a mistake. It started feeling normal.
That's how habits are built, not in one big moment, but through hundreds of tiny repetitions. Psychologists call this the habit loop. Every habit follows the same 3 steps. First, a trigger, then a behavior, finally, a reward. Imagine you're watching a trade. Price starts moving against you. That's the trigger. Immediately, fear appears. Instead of accepting the loss, you move your stop loss. That's the behavior. A few minutes later, the market bounces, even if only temporarily. Your brain feels relief. That's the reward. Notice what just happened. The reward wasn't money, it was emotional relief. And your brain doesn't know the difference. It simply learns, moving the stop loss made me feel better. So next time, it encourages you to do it again, and again, until one day, breaking your rules feels automatic. That's why most traders don't lose money because they lack knowledge. They lose money because they've unknowingly practiced the wrong habits thousands of times. And here's the scary part. Your brain never asks whether the habit helps you. It only asks, should I repeat this? If the answer is yes, the pathway grows stronger, whether that habit builds your account or destroys it. But here's where things become even more interesting. If your brain rewards whatever brings emotional relief, then why does it choose short-term comfort over long-term success? The answer comes from a chemical that has been controlling human behavior for thousands of years, a chemical called dopamine. Imagine this. You have 2 choices. The first, you receive $100 right now. The second, you receive $200 30 days from now. Logically, the second option is better. But surprisingly, millions of people choose the first. Why? Because your brain values immediate rewards far more than future rewards. Psychologists call this present bias. Your brain isn't designed to think years ahead. It's designed to survive today. Thousands of years ago, that made perfect sense. If food was available, you ate it. You didn't wait until next week, because next week was never guaranteed. That ancient survival system still lives inside you today. And that's exactly what appears every time you trade. Imagine your trade is already in profit. Everything is following your plan. Your target is still far away, but suddenly the market pulls back just a little. Immediately, your brain whispers, take the profit. What if it disappears? It might reverse. So you close the trade. A few minutes later, the market reaches your original target. Sound familiar? Now imagine the opposite. Your trade is losing. Your stop loss is about to be hit. Your plan says, exit, but your brain says, wait a little longer. It might come back. Notice the pattern? When you're winning, your brain becomes impatient. When you're losing, your brain becomes hopeful. Both decisions feel completely different, but they come from the exact same place. Your brain prefers immediate emotional comfort over long-term consistency. And that's why professional traders don't trust what feels comfortable. They trust what their plan says, because comfort often creates expensive decisions, while discipline creates profitable ones. But even if you understand how your brain tricks you, there's still one question left. Why do intelligent people keep making the same mistakes again and again? The answer has nothing to do with intelligence. It has everything to do with identity. Have you ever noticed that 2 traders can look at the exact same chart and reach completely different conclusions? One sees a buying opportunity. The other sees danger. The chart didn't change, only the minds looking at it. Because here's something most traders never realize. You don't trade based on what you know. You trade based on what you believe. Imagine someone who believes, I always mess things up. The moment a trade goes into profit, what happens? They become nervous. They think, I should take the profit now before I lose it. Not because their strategy says so, but because deep down they don't believe they deserve a big winner. Now imagine another trader, someone who believes, I can't be wrong. The moment a trade moves against them, they refuse to exit. They move the stop loss, average down, keep hoping, because accepting the loss would destroy the image they have of themselves. Notice something. Both traders know the rules. Both traders understand risk management, but neither one is following knowledge. They're following identity. That's why changing your strategy rarely changes your results. Because wherever you go, your beliefs go with you. And until you change the story you keep telling yourself, you'll keep creating the same outcomes. Professional traders don't just build better systems. They build a better identity. They stop asking, how do I make more money? And start asking, what kind of trader do I want to become? Because once your identity changes, your decisions quietly begin changing too. But even after changing your identity, there is still one invisible enemy waiting for every trader. It appears without warning. It makes you believe this trade is different. And in just a few minutes, it can destroy weeks of discipline. That enemy is emotion. Imagine this. You followed your trading plan perfectly. You waited for hours. The setup appeared, you entered the trade, everything according to your rules. For a few minutes, nothing happens. Then suddenly, the market starts moving. Your position goes into profit. Your heart beats a little faster. You open your trading app again, then again, and again. You weren't planning to watch every candle, but somehow you can't look away. Every tiny movement feels important. Every red candle feels like danger. Every green candle feels like relief. And without realizing it, you've stopped following your trading plan and started following your emotions. Here's something fascinating. Your emotions don't appear because you're weak. They appear because your brain cannot tell the difference between financial risk and physical danger. Thousands of years ago, if you lost your food, you might not survive. If your tribe rejected you, you might be left alone in the wilderness. For your ancestors, loss often meant death. Today, losing a trade won't threaten your survival, but your brain still reacts as if it does. That's why your palms sweat, your breathing changes, your thoughts become faster. Because deep inside, your brain believes you're in danger, not from the market, but from loss. Professional traders feel these emotions too. They aren't fearless, they aren't emotionless. The difference is they don't allow emotions to make decisions. They let the trading plan make the decisions because they understand feelings are temporary, but decisions can affect their account for months. But emotions are only half the story because even after the trade is over, your brain isn't finished with you. In fact, the next mistake usually begins after the previous trade ends, and that's where one of the most dangerous habits in trading is born. The trade is over. You followed your plan, or maybe you didn't. Either way, the result was a loss. For a few seconds, you simply stare at the screen. Your account balance is smaller than it was 5 minutes ago. Then, something changes. A voice quietly appears inside your mind. Get it back. It was just bad luck. The next trade will recover everything. It sounds logical, reasonable, even responsible. But it isn't. It's emotional. Psychologists call this loss recovery bias. The human brain hates unfinished losses. It wants balance. It wants closure. It wants to erase the emotional pain as quickly as possible. And that's exactly why revenge trading feels so irresistible. Notice what happens next. You stop waiting for high-quality setups. You stop calculating risk. You stop asking, does this trade fit my system? Instead, your only question becomes, can this trade get my money back? The goal quietly changes. You're no longer trading to make good decisions. You're trading to escape a painful emotion. And that's the moment the market becomes most dangerous, because the market doesn't know you need to recover. It doesn't care about your previous loss. Every new trade is completely independent of the last one. But your brain refuses to believe that. It connects events that were never connected. Professional traders understand something that beginners often don't. The market owes you nothing. Not a winning trade, not a recovery, not even another opportunity today. And the faster you accept that reality, the faster you stop making decisions based on yesterday's loss instead of today's setup. Because every revenge trade begins with one simple lie. I just need one good trade to get back to where I was. But more often than not, that one trade becomes 5, and 5 becomes an account you barely recognize. But here's something surprising. Revenge trading isn't the only emotion that destroys discipline. Sometimes the biggest mistakes don't happen after losing, they happen after winning, because success can be just as dangerous as failure.
Most traders believe losing is dangerous, and they're right. But surprisingly, winning can be even more dangerous. Imagine this. You've just finished 3 winning trades in a row. Everything worked. Your entries were perfect. Your exits were perfect. Your account has grown nicely. You feel confident. And confidence isn't a bad thing until it quietly becomes overconfidence. Without noticing, you begin changing. The checklist feels unnecessary. The risk feels smaller. The market feels easier. You stop saying, "My strategy has an edge," and start believing, "I have an edge." That tiny shift changes everything, because now every winning trade feels like proof that you're smarter than the market. But the market has a strange habit. It humbles everyone, sooner or later. That's why some of the greatest traders have a rule they never break. After a series of big wins, they reduce their position size. Not because they're afraid, because they understand the biggest danger isn't the market. It's confidence without humility. Think about professional athletes. After winning a championship, do they stop practicing? No. They return to the basics, because they know success can make people careless. Trading is no different. The moment you believe you've mastered the market usually reminds you that uncertainty never disappears. Professionals respect the market. Beginners often try to conquer it. And that difference quietly separates long-term survivors from short-term winners. So if losses can fool you and wins can fool you too, then what should you trust? Not your emotions, not your confidence, not even your last trade. The answer is something professional traders protect more than anything else: their process. Imagine 2 traders finishing the exact same day. The first trader made $1,000. The second trader lost $300. Who had the better trading day? Most people would immediately say the first trader, but professional traders would ask a completely different question. Did they follow their process? Because here's the uncomfortable truth: a bad trade can make money, and a perfect trade can lose money. That's the nature of probability. Imagine flipping a coin. If the coin is perfectly fair, you still won't get heads every single time. But if you flip it thousands of times, the probabilities always begin to reveal themselves. Trading works the same way. 1 trade proves nothing. 10 trades still prove very little. But 100, 200, 500 trades, now you're seeing the real edge. That's why professional traders don't judge themselves 1 trade at a time. They judge themselves 1 process at a time. At the end of every trading day, they don't ask, "How much money did I make?" They ask, "Did I follow my rules?" If the answer is yes, it was a successful day, even if they lost money. Because they know today's discipline becomes tomorrow's consistency, and consistency creates profitability, not the other way around. The moment you stop chasing the outcome and start mastering the process, trading becomes strangely peaceful. You stop celebrating every winning trade. You stop fearing every losing trade, because neither one defines you anymore. Only your decisions do. And that's the mindset that separates professionals from everyone else. So after everything we've talked about, there's only one question left. If discipline isn't willpower, if your brain can change, if your habits create your future, then what is the real secret behind traders who stay consistent for years? The answer is simpler than you think. Imagine 2 versions of yourself. The first is the trader you are today, still chasing the perfect strategy, still hoping the next indicator will finally change everything, still believing that 1 big winning trade will solve all your problems. Now imagine the second version, the trader 5 years from now. He still takes losses, he still experiences uncertainty, he still watches the same charts, but something is completely different. He doesn't panic, He doesn't chase. He doesn't revenge trade. He doesn't move his stop-loss because he understands something his younger self never did. The market was never the real challenge. The real challenge was always the person looking at the chart. Think about it. Every single trade is an opportunity, not just to make money, but to become a better decision maker. Every time you follow your rules, you're casting a vote for the trader you want to become. And every time you ignore them, you're casting a vote for the trader you've been trying to leave behind. The market doesn't build character. It reveals it. It exposes your fears, your impatience, your ego, your habits. And that's why trading is one of the greatest teachers you'll ever have. Not because it teaches you about charts, but because it teaches you about yourself. One day, you'll open your charts, wait for hours, take one trade, close your laptop, and walk away, without stress, without fear, without excitement. Not because you stopped caring, but because you finally became the kind of trader who trusts the process more than emotions. And that's the moment consistency begins. Not when you find the perfect strategy, but when you become the right person. Remember, the market doesn't reward excitement. It doesn't reward intelligence. It doesn't reward confidence. It rewards consistency. Every time you sit in front of a chart, you're not competing against millions of traders. You're competing against one person, the one looking back at you from the screen. Master that person and the charts begin to look different. Not because the market changed, because you did. And perhaps that's the greatest lesson trading can ever teach. The biggest edge in the market will never be your indicator, your strategy, or your broker. It will always be the mind behind the chart. I'll see you in the next video. In the next video, we'll uncover why almost every trader overtrades and why doing less might be the fastest way to make more.